All right, we back once again. Last 3 days using the Cope tool, extremely useful. I'm going to go over real quick what it means, what each line means, and how I'm using them to actually, essentially predict the market. And so, if you want to learn how to predict the market, learn how to use this tool. That's basically what I'm saying. It's similar to using Gex. I'm not going to stop using a Gex chart or using, you know, technical analysis or whatever, but essentially intraday and giving yourself an idea of trend. We're going to see this tool be very useful. So Cope, Cope essentially, I'm using this one as sort of a trend indicator over time. Okay, so this is a 3 day look, and what I'm seeing here is I wrote net distribution just because on a cumulative basis, the options premium effect, cumulative options premium effect, is net down every single day they're selling. Okay, the market went down every single day they're selling. The market actually ended up essentially lower for the most part. Now we didn't actually end lower than Thursday just because of this. We're going to talk about that, but on a net basis, every day it just seems like they're selling. They're selling, selling, selling. Okay, so that's going to give us our general trend. However, there's counter trend rallies that happen in the market, and being able to catch those, at least from what I've seen in the Discord and folks on Twitter, catching these counter trend rallies is extremely profitable if you know where to look for them. So, for example, here's one that was really obvious that happened on, and I wrote it down here. This was on Thursday, where you had essentially a $4 move in SPY. And why did that happen? Well, you can see here it made a lower low on price. Price is the blue line, but the gamma score and the flow ratio up, and the gamma score actually made a higher low. So you had a bullish divergence happen on the gamma score. So say you're watching this and you go, wow, flow ratio is up, and you've got bullish divergence on the gamma score. Uh, you know, Man, there you could really see a nice move here happening. And then where did the market go to? Gamma score essentially came up to the top, right? So you could play this either way. I choose to try and play with the trend. So if I know that the trend is down, then I'm looking to short the gamma squeeze essentially. But you could have played this too. So here's a double top on gamma, and what happened after that? Down. But then you had the bullish divergence on gamma, moved it up. The intraday trend was up for the most part, but the overall trend is down. So I would prefer to play this move here because this move was a lot more profitable, right? So if you're shorting this, you're catching $4 here, but then you're also catching almost $6, $7 there. So playing the main trend is a little bit better, a little bit safer. But however, using these divergences here are going to be really useful. Now, here's what happened on Friday. You had essentially gamma sideways, price sideways all day. Again, you had the net distribution, and you had a little bit of a head and shoulders here too. But you had essentially sideways to down flow ratio. So it wasn't sitting in a situation where people were necessarily betting for downside on an intraday basis. And so we couldn't break the lows. As soon as price broke up here and gamma score started going crazy, you had a nice breakout here, right? So there's that move at the end of the day where you could have played calls going into the end of the day, and you would have caught yourself about another 4 points. So using this now, however, again, what happens whenever the gamma score goes up here into this little area? It ends up being a pretty good short area, and the reason is because they are selling into this gamma flow. Right? Every time gamma goes up, there's a net distribution. So if my guess is you should have shorted here going into the weekend, because yeah, even though it looked like a nice move, there was actually, I think, a net sell happening into that. Same thing that was happening here. You had the net sell happening into it, and then you also had a net sell happening into this as well. It wasn't as bad because you can see on the flow the cope wasn't that bad. This was a bigger sell, and that caused the gap down. Anyways, you still have a downtrending market with the counter trend rallies, and those counter trend rallies are from the gamma flows essentially. So they're using the closing out of options into the expiry is what I'm thinking. They're using those flows as a means to sell, and so it's sort of a transfer of ownership of stock, or transfer of ownership of other options that is happening. That's why we call it a net distribution that's happening as of right now. Now this could flip again if we see all of this flipped up on Monday. Well, then I'll just be bullish the whole day, right? Very simple. But tracking this over time, I think, is going to be extremely useful. Hopefully you like this. If you did, if you stuck around this long, thank you, and make sure to like and subscribe, and leave a comment below if you're using this in any different way. I would love to learn how, and we'll see you next time.